So it is time for session 13 for the precision traders with our tab 29. No, it's the 30th here. And today I wanted to go over some Waveology and some suggestions. So my suggestion would be quit friggin' hunting trades. All right, session's over. That's all I needed to say today. Quit hunting trades. Quit chasing trades. Quit getting so emotional over something you do that you got to see it through no matter what. There's a time for persistence without exception, and you have to know what that is. That's not when you're doing something you shouldn't be doing out of FOMA or desperation. I mean, look, I understand your demo account is your laboratory and experiment station. I get it. And so part of that learning process is, going through this phase. I don't want you being overly selective until you're ready to be. But there's several kinds of criterias, right? What I want to focus my time on is the Waveology part, and I want to get away from, the things that we all do as mistakes. And so I'm not beating anybody up, but we just need to be moving along. And again, I could tell who's been here how long, and somebody's been here a week. I have a different set of expectations that somebody's been here 4 months. Well, 4 months from IML into PT into November, December, and now into January. So, for the guys that have been here a long time, we've got to get past things like drawing forks the wrong way. That's just an RAS silliness, and you've got to get past that kind of stuff. There has to be a mental checklist enough that you yourself can catch that. I know I talk about you can't be teacher and student or student and teacher, but I think there's there's that foundational stuff we need to do. We don't need to try and execute a trade from a 30-minute chart, that kind of stuff. Okay. And then that continues to get more and more refined. That criteria becomes a little bit more refined as time goes on. In terms of tab 29, a lot of your SIG RAS is still oriented towards holy grail trading. And you've got to get away from that. And a lot of you are still trading tab 29 without consideration for what's going on in the price field, forgetting it's a relative channel. Price is absolute and scaled. Tab 29 is a relative indicator, as is RSI, stochastics, and a lot of other indicators. They're relative in terms of measuring a trend strength, regardless the size of the channel. And there's just way too much. I'll just net it out. We have, oh, come on. Where's my ink to go? I was just using it. Lordy, lordy. Hold on. Let's try this again. There it is. There's only so many conditions. So let's review them. Only so many conditions we want to worry about with tab 29. The first one is a true convergence where at least the 10-minute wave has come down, power 10, and the 1-minute wave is converged somewhere in here, and it's moving off, and we have green bars. Now, that is even better, but I'll say optional, when we have that 30-minute wave in there as well. So this is harmonic wave convergence. So I'm talking about entries. We do have the occasional 30-minute snake with the 10-minute converging and pulling out of there and doing a number of moves up. Of course, the question is we never know how high it's going to go before it's going to come back down and converge, and every one of these has a 1 minute, could be extreme, could be short of extreme, but nonetheless to the top and hook back. None of these are good until the 80. Until the 10-minute wave gets up into that 80 plus box. Then we can do a sell. So that would, in this case, as I've drawn it, that would be a sell into the buy. And that would be here. When the 10-minute wave gets above 80. In the opposing direction, it would be below 20. And that means that none of these is a sell into the buy. They collectively have about a 20% success rate. This has about an 80% success rate. Now, so I will dot it out. All right. Does anybody know of any other trades with tab 29? And of course here, we make this complete. In this case, we have red bars. Does anybody know of any other pattern we look for? Is there any other pattern that we look for and trade? Yes or no? Buying to the sell is the same as selling to the buy. Just bottoms. No, tops and bottoms. No, 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 no. Tops and bottoms are going to be convergences. Okay, so we got a couple examples here. Talking about tab 29. If we have, these are tab 29 entries. Pen. Trend lines don't need tab 29. We can trust the hook back. So we're left with a couple of things. We have pieces of 10, which would be a 10-minute convergence. And again, it could look like the first one. We'll draw it out a little bit more. It may or may not have a 30-minute convergence. And we have the reality here of, as it's been drawn here, higher lows. But one thing to note, so I want to put that here. We have harmonic wave convergence, true harmonic wave convergence. We've got sells into the buys and buys into the sells above 80. And we have convergence traded as pieces of 10. And that may be getting in at the convergence, that may be missing it or skipping it and getting in at the first pullback, whether we want to call that a wave 2 or just that first pullback. Yeah, it's kind of funny when we're talking about 15-minute waves and we say pieces of 10. It's become a generic expression, so we understand what we're talking about. Pieces of that middle-sized wave, whether it's 10 or 15. It's too long of an acronym. Pieces of 10 comes from harmonic wave convergence. It originates at a harmonic wave convergence. It originates with impulsivity. Trend lines, I'll say price trend lines, don't need tab 29. Now, the only time you can ignore or skip, technically, the higher high, lower low, again, would be trend lines, which we don't need pieces of 10, and where we don't need tab 29 are more so the trend bars. You'd want to see the hook back in the wave. So we don't need the trend bars. The only other exception to not needing high low, higher low, lower highs, etc., would be with trend lines in the indicator. So trend lines, I don't know what a good way to show an indicator is. I'll just say indicator trend lines, since I use price above. No rules for higher low, lower high. All right. Can you think of anything else that we trade tab 29 with? Reversals. These are tops and bottoms. That's why it got its name. For convergence. Yeah, I don't want to talk about support and resistance, but yeah, we can use them at forks. We could use TAB29 with scans. We can use TAB29 with fibos, i.e. the scans, forks, and fibos group. Essentially, strong PSR. P for potential support and resistance. Support and resistance isn't support and resistance until it actually supports it or resists it. Other than that, it's potential support and resistance. 62 bounce, you can take as is. It may be messed up in terms of higher low, lower high, etc. So TAB29 doesn't really facilitate a 62 bounce. That's kind of just an old school, new paradigm, unique point of opportunity. INS lines are support and resistance. Pieces of 10, 1 minute trading, that's right here on the chart. So there's nothing else right now that I'm aware of in our trading set and our training and our trading where we would use TAB29. So please, guys, stop doing this stuff mid-channel and trying to make it into a trade. It's a lottery ticket trade. And sometimes it's not even that. That's just a sign of desperation. That's just a sign of FOMO. That's just a sign of, oh, I put this much effort and this much time into it. I better force a trade out of this. Now, this is the problem with demo trading, because we can be a little bit laissez-faire. We can be a little bit casual in terms of, oh, it doesn't matter whether it goes or not. I'm just playing. When I talk about using your account as, your experimentation lab, I'm talking about, if you've, Dallas is in the midst of his pitchfork course, okay? He's kind of moved through Shredder. He's starting to do some multi-wave trades. And now he's, simultaneously, a parallel path. He's getting into pitchforks. And so I was talking to him last night. I says, okay, you need to start posting. I don't know what I'm doing. Post it. Let's find out what you know. Don't get ready to get ready. Send them to me. I'll tell you whether it's, what's wrong with it. That's the only way you're going to get better. It's so much faster than trying to get it right. So let me go through some no-nos. So anybody need to take a screenshot of this? This is all stuff that's legit. Except where it says 20% and we've got X's. So we've got harmonic wave convergence. We've got sell into the buys and buys in the sells, which are rare birds because it's only going to be when the 10-minute wave is 80%. Now look, when can you trade a sell into the buy, buy into the sell? Anytime. When, and I'll draw this down here as the exception. Does that all come through? Let me see if you get the bottom of that. Barely, huh? Okay. When, I'll do it from the top side. We have a 30-minute convergence, and it snakes. And we have a 10-minute convergence, and it snakes too. It has to snake. Then, 1-minute pullbacks against that, you can trade, in this case, as buys into the sell. But both the 10 and the 30 have to be snaking. We cannot have this situation where the 10-minute wave is retracing on out and the 30-minute wave, I need to draw this along here, the 30-minute wave continues to snake. Those are not 1-minute wave extremes that we can trade until the 10-minute wave gets to 80 or gets down to 20. However, if the 10-minute wave is snaking with the 30-minute wave, you can trade the extreme flips on this. Those are okay. The other place you don't need the higher low, lower high, like pieces of 10 mindset, is in extreme steep channels where you have a very accurate channel. It's not a price boundary, it's truly a trend line channel. But then it's just like a trend line where we don't need the trend bars. You're going to see the hookbacks, and that's all you need to see. Doesn't matter if they're progressively higher or lower, as long as you have the angle of the trend line for the bottom, up on a bottom buys up, sell tops coming down. As long as your price is starting to turn and you have a hookback, you can trade those. But those, a channel is just like a trend line in that regard. But what we cannot do, I'm going to blind you. I'm going to use black for white. None of these are trades. And I'm seeing it too often. Those are not convergences. There's no trend line demarcation in price. It's just, I don't know. I don't know where that's coming from. Those are not trades. And see, this is that point where we're on that thin line between not getting the training and trading to learn. We want to learn to talk about, the hookback. We want to learn, to make mistakes on how many pips to get in because, we forgot to measure the risk and, the reward. Those are the subtleties of being corrected. This isn't something we can correct. This is just outright not getting it. And that's okay. You could do it once or twice. But look, if you're following in here as a group member and you're looking at other people and you see somebody do that and it's like, no, 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 and then you go and do it 2 days later, we got a short circuit somewhere. Those are not trades. Any questions? The other thing, if you're in a 30-minute trade, or you're in a 15-minute trade, or you're in a 10-minute trade, the only time a 1-minute extreme excuse my writing. I'm getting one of those pen mice, not a stylus, but a pen mouse. I'm going to see if that helps me in these sessions, if it actually works. Only time a 1-minute extreme is an exit is when the 30 or the 15 or the 10, whatever wave you're trading, is at extreme. You cannot say you're in a 10-minute trade and you're exiting on a 1-minute hookback. That's pieces of 10. You can't be in a 15-minute trade and exit, oh, the 1 minute got too extreme, I exited the trade. You're entering a larger term wave, and if you're using 1 minute exits, you're never trading these waves. You're never going to get the pips. You're never going to get 20 pips in a 15-minute trade unless you're really lucky. You're never going to get 150 pips on a 30-minute trade. Never, 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 because you're using the tiniest wave there is, and as soon as it gets to its extreme, you're exiting the trade. How do you get from here in a 30-minute wave, how do you go from here to here, realizing, oh, I've got 10-minute waves, and inside those 10-minute waves, I got 1-minute waves, and you're trying to get up here for a 30-minute wave, and you're exiting here on the first hook back, or the first extreme of a 1-minute wave. All day long. You'll never get anywhere up there. So you have to figure out what it is you're trading. And this, my friends, guys and gals, as Jed used to say, are boys and girls. I think he said boys and girls. Yeah, boys and girls. Boys and to girls. Boys and girls. The ultimate trader dilemma, the ultimate trader challenge, is the desire to be safe on one side and the desire for big pips on the other. In terms of most of the time, they're mutually exclusive. The nice thing about TAB29 is you could get in there with pieces of 10 strategy and make hellacious returns. But, you know, it's chart time. So the next thing we want to move into is money management. You can't make the big pips with 1 minute trading. Now, I don't mean you can't make great returns. It's a different lifestyle. See, your success rate, well, and I hate to call it that, your rate of -3 accumulation is going to go up the higher wave you go. But when you hit one, it goes much farther than the lower level waves. So it's a head game issue. Don't process the minus sign in front of the 3 as you would in the old paradigm where it was -100. Get rid of the negative sign. Don't let it bother you. It's all about risk reward on an accumulated basis. If I go for a 30-minute trade, trade after trade after trade for 30-minute harmonic wave convergences, and I say I'm going to go extreme to extreme, I might only get, 1 or 2 out of 5. The other 4 might go -3, but the one that goes 65 pips. So who cares that I went -9, -12 to get the 65? And that's will repeat and repeat and repeat. But you'll go -3, -3, -3. This just isn't working. That's why we measure risk reward. If you've got something that's 20 to 1, it will eventually hit 20 to 1. But you're going to go through some of those ones to get there. Not 20 of them, maybe 2, 3, 4. But you can't have this security of a pips of 10 strategy where we protect ourselves and settle for small gains. You know, it'd be next to impossible to trade a decent 30-minute wave on a pieces of 10 basis because you're 1 minute trading the 30-minute wave. It's crazy. You know, you've heard me, I very often, almost frequently, trade a 30-minute wave or a 30-minute pitchfork where that first 10-minute wave I do is pieces of 10. So we'll talk about this as time moves on. This is a big deal. We're going to get into the use of the Hall, and we're going to get into the use of the 62 money map, which really lets you play with 4 and 8 hour trades on a 30-minute chart for huge pips. I'm talking 377 pip moves, 500 plus pip moves. Cha-ching. But you can't do that with a 1 minute wave extreme mentality. Yeah, the web analyzer was good timing there. So we'll get into the 62 money map. As I say, a boat that stays in the harbor doesn't get very far. And if a mindset is always, oh, it's at the 1 minute extreme, I better exit the trade, the boat stays in the harbor forever. Should we wait for a slight hook back of the 15-minute wave along with the 1 minute wave in case it continues to snake for a 15-minute trade? I'm not sure I understand the description. Should we wait for a slight hook back of the 15-minute wave along with the 1 minute wave? No, if I'm reading that right, go back to my black backboard. It's just too bright for me. So everybody understand here that these white 1 minute wave extremes are not trades. Unless they're matched up with something else. Any questions on that? When the 10-minute wave is not at a convergence, when the 10-minute wave isn't pulling back from a 30-minute snake and it's pulling below 80 or below 20, there's no trade. There's nothing going on with the mid-level waves here that we want to trade. So let's not do that anymore. So I think the question is this. I don't have orange. I'm going to use 10. We have 10-minute waves there. And I think the question is, do we wait for the 10-minute wave to also, or the 15-minute wave to also hook back before we take the 15-minute trade? Is that what the question is? No. Why no? You're trying to predict whether it's going to be a convergence or a snake continuing. You do not know that at this point. As soon as the 1 minute wave pulls back, if you're going to wait for the 15-minute wave, what you most likely will see is this. And now, if you look at the price action on that, price went up, it continued to snake, it starts pulling back. By the time the 15-minute wave starts to pull back, here's your trade entry. This is your entry based on the 1 minute wave pulling back and what? Green bars. Excuse me, red bars. That's what happens when you don't get sleep in 24 hours. Now, what happens is if it's the wrong time, and I get in here and the 10-minute wave didn't start to come down, and my 1 minute wave starts hooking back up, there's my exit. Money in the bank. I'm going to exit with money in the bank. On a quick move, 0, maybe -1, maybe +1, maybe +2 if it went deep enough. You're going to take this every time because the difference is it might take 7, 10 pips for that 10-minute wave to start coming down. If that's been deep enough, you may even have green bars and you might even be able to enter a buy. But this is just straight pieces of 10 trading. Convergences we cannot guess. They may snake, they may drop 200 pips. That's why we want to be in them. The nice thing is we have this mechanism here. So if this does go up hundreds of pips, we go out of this trade 0, -1, +1, whatever. So nothing trade. Now, if we exit here and it does that, that's because what's happened up here is we probably got our wave 2. And we get to re-enter that trade. Lower high, hook back, boom. So it's the best of both worlds. We prevent the runaway reversal or higher snake, higher convergence, and we get to get back in this thing if it's really going to drop. People are afraid to exit here. Oh, I'm so afraid I'm not going to be able to get back in, Steve. If it's going to drop, you're going to be able to get back in. If there's a wave 2, you're going to be able to get back in. The only time you're not going to be able to get back in is when it hauls off in the original direction of the move. And that's exactly why you wanted to exit there instead of going -3 when you were up 8. Questions? All right, little pop quiz. Pitchforks. I have a traditional pitchfork. Let's not talk about scans for the moment. I draw this pitchfork, swing high, swing low, needs to point up. I go back to the previous swing low with my median. We're expecting price to come up. When can I trade this pitchfork? Here's your test. When can I trade this pitchfork? No, not right away. On the first bounce. On the first bounce. Too many of you are submitting trades and, having taken the trade here or saying you took the trade there. It has to go up. It's ready to be traded on the first bounce. That well indeed may be a wave 2. A wave 2 here is acceptable as a trade. Now I say wave 2, I'm talking about that as a wave 2. I'm not talking about that as a wave 2. That could be just that low trying to position itself, and it may come down a little lower. So I say wave 2 is fine. So a bounce there would be tradable. A bounce off the median would be tradable. First touch after the fork has been drawn. There's no trade in here. Everybody clear on that? Last night in the IML session, we went through a bunch of pairs, and on one of them I drew a reverse fork. Got the trend lines in there, whipped it around, then had the fork going in a forward direction. When I did the reverse fork, I had 4 or 5 really good to the pip, outside boundary median hits. There were some breaches here or there, but it also shown that was the right direction at the right angle. So now when I flip that best fit around, I do not need any more confirmations inside of it. It becomes like a traditional pitchfork. I can take the first bounce. Only on a best fit where I did a reverse fork and had solid touches. You can have a TAB29 trade that is a pitchfork trade. On the bigger moves, that's what I'd be looking for. It should be. A swing low or a swing high on your time period should be a convergence. If you're the reason we don't take this first trade is because we don't know what it's doing yet. It may come down and come down to here and then go. And yes, at that point, you readjust your fork. Your fork now is there. That's why there's no trade there. That swing low is not set in concrete just because it's a low and price starts to leave it. It could be breathing a few pips. It could actually do a 10, 12, 15% retracement and drop to a lower low until it really starts coming up. Once it comes up and hits the median, once it goes back down and does a perfect wave 2, what's the best way? We know this could be a 2 wave. Down below in tab 29, in the case of this and a move up, we should have a higher low. POT looking kind of thing. What else? How can we really be sure that's probably a wave 2 with high degree of confidence? Tell me more, Ariel. How can we know that's a wave 2? No, not 38.2. It falls between 50 and 61.8. It's going to do that 73% of the time. Second win for being so fatigued. 50 to 61.8, 73% of the time. Pretty high percentages. That's a great entry because now you're entering the super impulsive side of that move. Yeah, you don't have to worry about in this case about going below wave 1 because we're trading the bottom. It can't, if it breaches the pitchfork, it would have to breach the pitchfork to get back to the X in the X to 1 move. Good knowledge, good to remember that, but it's not that relevant here because we'd have to breach the fork to come all the way down to 99% or whatever. Let's go look at some pips. One of the reasons why I'm up. It's an interesting night. Good night. So let's look at the bottom left. All sorts of stuff going on here. But it plays out. Who can tell me what the green staircase is? Somebody asked. What's the green staircase? Good guess. Well, that was a good guess. Who got it? Jake. You have no real way of telling which it is. Being stair-step, you might guess by how much it's stair-step. We're on a 1-minute chart. So it's not a 30. That is a 10-minute haul. We'll get back to that in a minute. I draw your attention to the bottom left-hand corner. 30-minute wave had been snaking. 10-minute wave was on its way down. 30-minute beat it. In old multi-wave days, that's a lower level leading upper level. We don't worry about that in tab 29. We wait to see the 10-minute wave pretty much gets down there. And now when the 1-minute wave's moving out of there, we have a trade. Now, let me do this. Well, I'm going to leave it where it is because I want to be able to look at this whole chart. As you can see on the right, let's get our eyes adjusted. Those are, how big a channel? 10 pip channels. You can get a good guess then how big these candles are. That entire channel's 10 pips. That's probably about a 3 pip candle. Got my green, finally turns blue. There's my trade. Goes up, starts coming back. Uh-oh. Exit. Pieces of 10. Now, Zoe asked about this a few minutes ago. I wasn't ignoring you, Zoe. I just wondered, I knew I was going to get here, so I was just waiting for the right time. Pieces of 10. Or you see it as another convergence. Doesn't matter. 30-minute wave still snaking. 10-minute wave comes back down. This technically is another convergence. In terms of price, it is at a lower low, which makes sense. If it converges and price goes low, that has to be a convergence too. So we're good to go. And we're even more good to go because, per Zoe, we have divergence. So that's going to be a real strong entry. Now, price starts moving up. Loady-do, loady-do, loady-do. We have a hook back. Do I have all red in there? I do not get my red bars here. Is that more than a 40% pullback? No, it's not. So I stay in the trade. Now we get up here and it starts pulling back. Whoops, I got a hook back. Do I have red? Yes, I do. Exit the trade. Two to get in. Hook back, get out. There's 10 pips in between. Over here, two to get in. Hook back to get out. Maybe about 3 pips. Price comes down, higher low, green bars, enter the trade. Price goes up, we have one spot right there where we actually have all red. Somewhere in here, exit. Once again, not a huge move. You know, we got in, had to pull back, we might have netted 2 to 3 pips inside. Guess what? Higher low, green bars. Goes all the way up to convergence until here. Which is where? Right on this line. That's 10 pips. Let's call that the exit. We'll give up 3 or 4 pips on the pullback. We took a couple pips to get in. We still probably made 13 pips. Now, we have a convergence. I'm going to erase some stuff down below. Don't want to get too busy. You have a choice to make here. You have a convergence. 10-minute convergence. Darn you. You're not supposed to tick off another minute on me. So 10-minute convergence here. at your exit. That's why you should exit. You had your opposing trade. Do we enter that? If we enter it, if we don't enter it, why? If we do enter it, why? It is a 10-minute convergence. Okay, so we're all over the board here. So we're getting too much upward pressure, may not go far, it's a snake. 10-minute, 1-minute converge, yes, it's a convergence. Don't enter because the trend is up. No, 30 is still going up. Hold on to that, Jake. We buy bottoms. Don't enter as the long-term trade is bullish on the 30-minute wave. Same thing as Jake, Darren. Good, just maybe one shorter than the other, but same concept. Where am I? No sells on upward channel. Yes, it's at extreme, so willing to take a -3 to catch the ride down. The blue isn't up as well. Sell in an uptrend. No, it's backwards. It should be buy in an uptrend. 30-minute is still moving up. 30 is still moving up, causing upward pressure. Do we wait until it settles in the new direction? You're supposed to be telling me that. There's no divergence there. I don't see divergence. If I'm looking at this as a sell, I got to go to my previous highs here, wherever you may want to look, and it's all upward in here. So price and RSI going the same way. Whether you measure tops or bottoms doesn't really matter. All right, so let's explain this a little because good questions here. So the first thing is, why do we trade a harmonic wave convergence? What is a harmonic wave convergence? What is a harmonic wave convergence? I'm not looking for the technical, multiple time frame wave exhaustion synchronization stuff. I'm looking, why do we trade harmonic wave convergence? Yeah, we're looking for a reversal. So if I have a convergence, that just may mean price is going to drop 200 pips. Remember, in every price channel, it will eventually be broken. And it's going upward channel is going to be broken down. It's not going to break up. It's going to break this way. And we'll never catch the breakout moves where we're ending several waves unless we're taking those trades. But we have a rule for taking those trades. And the rule is, because in an upward channel, where there is upward force, there is a chance they're going to go -3. One of them is going to be the breaker at some point. We don't take these trades unless what? We already have green in our hands, in our pockets. That's where here the buy, as a buy into the sell, gives us positive pips to where if we go -3, it's just insurance. We're buying insurance. It cost us -3. The insurance against a big move down. So we enter the trade just in case. But if we just made 12 pips up, if we just made 10 pips up, if we just made 15 pips up, the -3 doesn't hurt us. And then we take the next bottom up to the next one. Here's another +8, +10, +12. A -3 doesn't hurt us. These are insurance policies. You don't want to come in and start taking sells in an upward channel unless you have pips in hand. Hold on, we'll get there. The thing that we have going on here is, think about this. This can also be, and again, I'm not going to get totally into how we would determine all this, but it could be one of two things here. The 10-minute wave is above the 30-minute wave at this point. That's not a lower, that's not, it's not a lower level leading because the 30-minute isn't at convergence yet. It's not that kind of situation. So one of two things is happening here. One, the 10-minute wave is going to extremes as, come on, mouse. Oh, my Lord. Oh, my Lord. I'm going to draw the 10-minute wave in its multi-wave. The 10-minute wave is going to extremes because it's dragging the 30-minute wave up. And this just may be, there's a 30-minute wave, this just may be the 10-minute wave dragging a 30-minute wave up, and it's going to come back down some and drag the 30-minute wave to convergence, which it actually does right here. We don't know that's what it's doing. It could be doing that. The other thing that may be happening is the 30-minute wave, the 10-minute wave is cycling, and it is indeed pulling the 30-minute wave up, but the 30-minute wave is coming from a convergence, and so this may be a 30-minute wave going to its extreme. It's never going to converge. Now the 10-minute wave is finished lifting it up as high as it's going to go, and now the 10-minute wave is going to continue to cycle as the 30-minute wave comes back down and converges again at the bottom. So this may be just a retrace pullback going up there. See? You don't know. You don't know. That's exactly what that may be. So orientation. This is what I was talking about earlier. If you're thinking you want to catch some bigger pips someday, some of these types of trades you're going to have to chance, but they're calculated risks because the only way you're going to take that trade is if you made pips on the way up, like we were doing. Everybody get that? I don't remember the totals we gave ourselves here. I think 3 and 3, and I think somewhere in here we had, oh, this was 10. And this might have been another 3 or 5. And then what? Look at this one. Green bars, You're in that trade till where? Up here. That's where we talked about. So there's a good 20 pips. We're talking about this sell. First move down from here, not a whole lot of pips, turns around, goes back up. So if we took that, might not be a -3, but could be -1, could be 0, could be +1. That's just details. Who cares? Retrace extreme. Is that a buy? It's not the 62. That's the center line of my Bollinger. Have a good day. No, don't try to. There's only one reason it's a buy, and that's because it's a trend line hit, and I'm about to go grizzly because I just spent 45 minutes talking about we do not do a buy into the sell until the 10-minute wave is below 20. The 10-minute wave is not snaking there. There is no buy per tab 29. That is not a valid buy into the sell. We just spent 15 minutes on that particular picture with XXXX until the 10-minute wave gets below 20 or above 80. If you're in your car, I don't expect you to see the visuals. Guys, I don't know how many places that said in the tab 29 trading. I've talked about that way too often. First 90 days of running tab 29 before I released it when it was beta testing by me and Adam. 20% as a collective. Everything below about 10 to 80, didn't matter whether it was 10 or 30 or 40 or 60, with a 1-minute wave going to extreme and hooking back green bars, only had about a 20% success rate. Did we not just cover that 40 minutes ago? Yes, no? Has everybody left me? So stop doing it. Sink it in your programming right now. There is no buy into the sell or sell into the buy unless it's on a trend line, unless the 10-minute wave is snaking, or unless the 10-minute wave gets, in this case, below 20. It doesn't matter whether from here it goes up 100 pips to reconverge. We don't care what happens when we're supposed to be doing what we do and we do it. We don't care what happens in terms of, oh, gee, it would have been nice to have been in it. That only suggests to your subconscious mind that the next time you see this, then, oh, it's okay to do because last time it worked. And I got people going to do their own things. I get it. But there's a trend line bounce there. All right. Pop quiz. Can I take this trade as a buy? Right there. Yes or no? What up, Callie? Come on. Y'all afraid to talk. Yeah, I've only seen the commercials for it. I don't watch shows like that, but I've seen the new Ellen show with all her trapdoors and crap. But yeah, that's where you all are. You're afraid to say anything. This was a no, but it was a yes. Yes, you're not paying attention. Look how quickly your RAS can be tricked. It's still the same friggin' trend line. I gotcha. You were so worried about TAB29. It's still the same trend line. Oh yeah, now all the yeses come. Now you're willing to volunteer it. That's hilarious. I love it. I absolutely love it. No, yes or no earlier, but now I draw the trend line. Yes, it's a trade. Y'all cracked me up. No, power 10 has to be at a 20 to do a buy and to sell, not 80. We're doing a buy into the sell. This isn't a convergence move. Wrong side of the chart. A buy into the sell has the power 10 coming down below 20 here. That's your qualified buy into the sell. This is at the top going back into a convergence. Y'all crack me up today. What up, Callie? All right, question. Is this a valid buy into the sell? Yes or no? Come on, everybody answer. I drew the trend line for you this time. I filled it in. Yes, it is. See, you're spending too much time in the indicator and not enough time looking at the charts. It's the same thing. It's not a valid buy into the sell per the indicator, but it's still bouncing off the same trend line. It's a valid buy. Oh, it's still a buy into the sell. Don't get semantical. It's still a buy into the sell. We're still buying until it goes up to a convergence point. I'm not going to get caught on that kind of semantical stuff. To see, I'm showing what I'm doing here is I'm showing you all the ways your RAS will trick you. And I know where you are, so you're pretty manipulatable, if that's a word. I can manipulate your RAS by taking you in one direction and then catching you on the backside because you just weren't looking at the data coming in on that side. And every one of those would be an exit at the convergence. Look at the pips. These are 10 pip channels, my friends. All the way up there for the breakdown. All the way up here for the breakdown. Now, I got some other opportunities in here for buys into the sells. Oh, look, the 10-minute wave isn't down at 20. 10-minute convergence, 30-minute convergence, good trade. It is against the trend, but guess what? Maybe this is the one that goes. I've just made a boatload of pips. Can I take that trade? Should probably. Another convergence. Callie. She's like a vengeful dog that doesn't get his way. If I don't pet her right now, she wants me to be petting her. If I won't pet her, then she goes rubbing her chin and her whiskers on anything that's in sight. Doesn't matter whether it's a bottle of water, the corner of a monitor. All right. So what else do we see on this chart that might be of interest in this move that occurred overnight? Late this morning. Well, late this morning, my time. Very good, Steve. Very good, Darren. Good eyes. See, RAS. RAS's function, SIG's function, your sensory information gateway's function is to filter in and screen out. And it's based on frequency of programming. So it's easily confused if it doesn't have enough programming. Volume of trades. Somebody caught it at the beginning, and Stephen and Darren caught it again now. We have our 10-minute haul on the chart. Who else wants to tell me something about this convergence? We'll see how many real good IML traders we have here. Anybody tell me why that's a good trade besides being a harmonic wave convergence? Yeah, thank you, Alan Andrew. Now, I don't expect everybody to get it. Just those that are taking advantage of their IML membership. That is a snapback entry. What snapback? We've talked about it a little here and there. We haven't fully gone over it, but that's a snapback entry. We've got our Bollinger Band. We've got the second breach of it, and we have a Zorro pattern, which in terms of what we know is the start of a Gartley of some sort. So that C entry, we need to have a breach of the Bollinger, and we need divergence body to body. We have it. That is a snapback entry right there, as evidenced by our 30-minute wave. Now here's something powerful, and we'll eventually learn the snapback strategy. But don't go and try and chase it down right now. You want to understand what it is, and that's cool. But here's where, being in the new paradigm, having TAB29, you guys paid for something special, and here's where you get paid for it. In that snapback entry right there, closed candle, it may have had a wick. We would have been there earlier. because on the pullback of the wick, they're waiting for a candle close. So we will actually make more pips. Now, it might not be much, but hey, 2, 3, 4 pips times once a day times 260 days is a lot of pips. Who was it that got it? Alan, what's the exit strategy for snapback? What's their take profit and out? Yeah, usually the center line, that's their take profit. That's their target, the center line of the Bollinger. Sometimes, the outside. This might be a leg down 50, and, if you feel good, RSI isn't quite overbought here, getting close. So maybe ride it to the top. Maybe. What do you see here with our 30-minute convergence? With a 30-minute convergence, you should at least, if it's not going to continue to snake, if it's actually going to take off, which is why you would take a snapback trade or any trade, with a 30-minute convergence, you would expect at least a 10-minute wave to get to extreme. My friends, TAB29 just gave you twice the pips, all the traders trading snapback. That's why what we have is special. So these other strategies that are Davin's 4 rules, or Davin, whatever it is, Davin. I talked to him yesterday afternoon. Got some, insight. He's altered his strategy a little to coincide a little with Luke here on the snapback. The snapback, there's a whole bunch on the harmonic analyzer, and one by one we'll look at them, and one by one we'll study them, and if they're any good, we'll look at them. But if we trade any of them and use TAB29 to give us more precise entries, more precise money management, we're good to go. Now, the nice thing about this 30-minute entry, knowing that it's a 30-minute convergence at the time right here, the time of the snapback entry, and we take that first 10-minute wave to its extreme and wait for the downside, so somewhere up in here. We also see our haul has finally moved in our direction. If it was time to exit the trade there, the haul would have never turned green. We're going to do more and more of this, David, but I can't do it unless there's a foundation. So I'm just cleaning up stuff I see in the group. So, we can elevate, and then teach more advanced stuff. It's not so much more advanced, it's just more stuff. You got to program your RAS, you got to program your SIG. That's all it is. We're just doing programming now. So, my 10-minute RSI, my 10-minute haul finally turned. And it probably should, because I am 10, 20, 30, 40, 50 pips into the trade. I should be able to trust my 10-minute haul at this point. Now, I have robotic money management, because I don't have to, is this a buy and the sell? Oh, is this a trend line hit? Oh, blah, 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 blah. I got something here better. Robotic, we have a haul flip alert. I could go read a book. I could go do the dishes. Or as I told Ben this morning, he could go make out with his fiance. And now when does my haul flip alert tell me? Right in here. So if I got in the trade here, and I get out on the Hall flip, coming down, candle close, let's just call it there. It's about 80 pips. 80 times 2, 16%. And I only had to work through the very first part of this. I always say, I saw a snapback. I know we're headed towards the, this is so high percentage, and it usually almost always gets to the middle line. Already bypassed a couple of pieces of 10. Don't need, I'm going for the 10-minute wave because it's a 30-minute convergence, right? It doesn't matter where I get in. I can get back in it. If I did exit, it's okay. But once I get up in here and I see the Hall is flipped, I can just ride that out at that point. We haven't even looked at pitchforks coming into this trade from upper level, lower level. We can look at a pitchfork here also for money management potentially. I didn't do it, but you know what? Why not look at it now that I see it? Which one do we want to use? I'm going to go with the one first that is actually higher. Hold on. Let me get this set better. Now I can turn it off to play with it. I'm most afraid what I'm going to see here. That's good. 1, 2, 3 good bounces there. But let's also look at this, moving it to this high. It's the more recent high, even though it's a little lower. And not tons lower, but it is lower. Nothing to the bottom. Whoa, drift on me. Looking pretty good there. I like that. So we got a nice to the pip. We got a nice to the pip. We got a nice to the pip. It did leave it, come back and check it right there. So we could throw warning lines on it and see what we have here a little. We can do a fork fibbo on it and see what we have this way. All sorts of possibilities. See, it's stacking probabilities. Yeah, I know. Tim Packus did mention putting a fork on it. So let's get the basics down. All right. Know your conditions for what's a valid TAB29 trade. Don't be so stuck in the indicator that you can't see other things like trend lines or fibbos or pitchforks or Bollingers or other strategies if you know it. And by the way, these things are all over the place. These Zorro moves. What? W's at the top, M's on the bottom. They're strong trades. They're not always per snapback, but they're strong trades if you can find some reason to take them, be it a trend line, you know, pitchfork bounces, etc. Mask on. No, I don't get. My brain could be fogged, Tim. Oh, Zorro. I get it. I get see. It's a good joke, but I'm too thick to have caught it. Sorry about that. All right, we covered a lot of material. Any questions? I think we covered today. It's a good fun session. I love looking at charts. I want to do much more of that, but we can't do it unless everybody's on a foundation, because then I get too many questions. Why'd you do this? Why'd you do that? And I don't want you to do why. I just want you to go, oh yeah, I see it, so we can program. So we can't do a lot of jumping around on pairs on charts fresh until, the majority of you, and we got people brand new, so, we understand, you'll catch up. Well, I saw some, we see stuff in the group and we just try and fix it when we see it. Oh, they're not going to end this week. What's going to happen is I'm probably going to do maybe one more week on Tuesday mornings, and then we'll just settle down to one a week for a while. Because I want to get a teaching in with corrections, because the new people will benefit because they're going to see this session. It'll be in the sequence of sessions, and so they'll see this session. So they'll have a chance to, as they're in the appropriate spot, see this. This is why I always tell people, can't get a new person in and binge watch 12 sessions over a weekend. That's not going to do you any good. Because what I went over today, 90% of you wouldn't have been able to even begin to understand what I was trying to explain if in 24 hours you went through all the sessions. You need those demo trades. You need times on the chart. You need times, posting. We got so much good stuff coming. We got some fun stuff coming yet. It's not the basic training is not done yet. It's stretching it out just a little, giving you a little bit more. It's supposed to be the abbreviated route, and it is. Tim Zodi will tell you that you're moving at lightning pace. I've cut out a lot of the fluff. Richard's traveling today. He'd tell you the same thing, but he's traveling. All right, I don't see any questions. I don't want to hold you up for your day anymore. Thank you for carving out time to be here today. I hope you have a good week until I see you Thursday night. It's just 2.5 days. And with that, I will remind you, life can be short. So for those people who care and love, let them know you care and love them. I will be on tonight at 8 p.m. Eastern in the crypto room, crypto trading in the new paradigm. All we're going to do is a little bit of pitchfork review and checking charts, coin charts, crypto charts, with all that stuff. All right, you guys have a great couple of days. I'll see you in Facebook land. Take care.